Fundrise is the real estate investing platform that promises you the ability to invest in real estate just like a pro-accredited investor. They promise you the benefits of being able to invest in private real estate with as little as $1,000 while leaving the hard work of actually running the properties to somebody else. Now that sounds pretty good, so let's put that to the test. Hey everyone, and welcome to FinTech. And in this video, I'm going to be reviewing Fundrise, looking at how the investments work, how they actually plan to make you more money than you could just make, say, in the stock market, and actually walking through the site to show you what it would be like to invest with them. This video was made in partnership with moneymade.io, which is a platform that lets you discover, learn about, and invest in different types of investments. I'll include a link in the description if you want to check them out. So hit the like button and subscribe if you want, and let's dive right in. Fundrise is a platform for investing in all types of real estate, from flipping houses to renting out duplexes to investing in trendy areas that will hopefully go up in appreciation. They take a very holistic approach to real estate investing, and while they do use a lot of buzzwords on their webpage, it seems like the strategies that they follow are pretty smart. They use crowdfunding to fund these real estate projects across the country, pooling a whole bunch of users' money together in order to complete the projects. And even better, you don't need to be an accredited investor to invest in Fundrise because they meet the public disclosure requirements in order for everyday people to invest with them. But wait a second, you might say, how is this different from a REIT? Well, a REIT is a real estate investment trust. It's basically a company that goes out and buys real estate, and then people can buy shares in that company. It's a lot like owning a stock in the stock market, but there are some additional regulations, like the fact that they have to pay out 90% of their profits each year in the form of dividends. Now, Fundrise is technically a REIT, but it's not publicly tradable like most REITs are in the stock market. Instead, in order to invest in Fundrise, you have to go through their platform and you have to follow their rules. So you can't quickly buy and sell shares in Fundrise like you might with a traditional REIT, and there are some disadvantages and advantages to this approach. It definitely benefits Fundrise's managers because they don't have to worry about money flowing in and out of their accounts unexpectedly, so they can focus more on maximizing their real estate returns. As an investor, however, this means that your money is locked into Fundrise for a set time period, usually a minimum of 5 years. It also means that you need to meet their minimum $1,000 investment, which is an increase from the $500 they had a few years ago, before you can actually buy a stake in the company. So why then would you invest in Fundrise as opposed to a REIT, or even just an exchange-traded fund in the stock market? Well, to answer that, let's start by looking at Fundrise's average returns. So Fundrise first gained attention back in 2014 when they posted an annual return of 12.25%. The next year in 2015, they improved that all the way to 12.4%. Since then, however, their returns have dropped back to more closely mirror the S&P 500, returning 9.47% in 2019. Because of this fluctuation in their annual returns, as well as the relatively short history that we have to look at, it's hard to say exactly what Fundrise will return on an average year. However, if we look at the time period from 2014 until now, annualized, they have averaged 10.8%. If we compare this to REITs, they have averaged 10.5% over a 20-year period on average, according to the NCREIF. We can then compare this to stocks in the S&P 500, which is the largest 500 US corporations by market cap. Those stocks have returned on average 9.8% over a 25-year period. So just looking at those numbers, it's a no-brainer, right? We should all just invest in Fundrise. Well, not so fast. First off, the return history of Fundrise only goes back 6 years, versus the S&P 500, which has over 100 years of data to support the interest rate that they give you on average. There are also several other factors that we need to consider which might give Fundrise a disadvantage over traditional investments like a REIT or a stock. Now for this section, I am borrowing from a fantastic video that Graham Stephan did back in 2018. If you want to watch Graham's video, I highly recommend it. The first issue that Fundrise investors are going to face is liquidity. Fundrise recommends that you invest in their platform for a minimum of 5 years and for an average period of 7.6 years. This is not an investment you want to make if you're a short-term investor, but once you put your money into Fundrise, you're locked in. You can't pull the money out early without facing penalties. This offers less flexibility than a REIT or a stock where you can put money in and pull it out at any time without facing those same penalties. Kind of going along with that, you can't use Fundrise funds as collateral for a loan. With stocks, you can use your stocks as collateral to take out margin, or if you had a mortgage on a property, you can use that as collateral as well. Basically with Fundrise, once you put your money in, you have to forget about it for that 5-year period because you can't spend the money and you can't use it as collateral. The next factor you're going to want to consider with Fundrise is their annual fee. fees. They charge you in total a 1% annual management fee. Now they claim that this is a lower rate than you can get elsewhere, but just looking at the Vanguard Real Estate ETF, that shows an expense ratio of 0.12%. This means that in a year of investing with Fundrise, you're going to pay 8 times the annual fees that you would with the Vanguard ETF. They may or may not also charge you an additional 0 to 2% in the form of an origination fee on the properties that they're investing in. Now on their site, they use a little bit of weird math to try to show that Fundrise is actually going to save you money versus investing in an index fund by saying that this origination fee they charge will save you 25 to 40% in upfront costs that you would face in a traditional investment. The weird thing here is they're comparing to a traditional investment where someone would have to go out and source an item for you to a real estate ETF where you don't have to worry about those fees. They do this to try to compare the fact that index funds will save you around 0.85% every year to the fact that they're saving you 25 to 40% right up front. But this isn't an apples to apples comparison, so I think that it could be a little bit misleading in my opinion. Additionally, if you want to sell before the 5-year lockup period in Fundrise, you can do so, but you're going to face between a 1% and a 3% annual fee depending on how early you sell. The final potential drawback to Fundrise, which is also faced by REITs, is that they give out the majority of their returns in the form of dividends. The only issue with this is dividends are taxed as ordinary income. So if you're, say, in a 25% tax bracket, you're going to have to pay 25% of your gains to taxes. Compare this to, say, a long-term capital gain where if you own a stock for over 1 year, you would only have to pay 15% in taxes. Similarly, you could compare this to an actual real estate investment like owning a rental property where once you depreciate the cost of the loan versus your rental income, you might end up paying $0 in taxes. So you would have to weigh all of these different factors against the slightly higher returns that Fundrise might offer you versus a REIT or stocks. So taking all that into account, who might this platform be good for? Well, first off, non-accredited investors are definitely part of the target audience because accredited investors could probably go out and find deals elsewhere. That being said, accredited investors can still use this platform. Fundrise is also focused more on long-term investors, and even though their minimum time period is 5 years, they're really focusing on people who have a longer time period, maybe 10 or more years to invest in their platform. The next major benefit that someone might find from Fundrise is someone who needs diversification. So this is someone who's focused more on preserving wealth than growing it. Now, most financial advisors will tell you it's a good thing to diversify your investments. For example, holding real estate and stocks at the same time. If the stock market goes up 1 year, real estate might not go up as much, but if the stock market then drops the next year, real estate might not drop as much. This gives you a little bit less volatility in your overall wealth. Now, you could use a REIT to try to gain real estate exposure, but studies have shown that REITs are actually fairly closely correlated with the movements in the stock market. Essentially, they move like an individual stock might in the stock market. They won't exactly match the overall trend, but they will move up and down in general with other companies. Because Fundrise has limited selling windows, they don't experience quite the same amount of fluctuation that REITs do, something that was very clear in early 2020, when the stock market dropped, yet Fundrise's funds stayed relatively flat. Now, obviously, at the end of 2020, as stocks shot up, Fundrise also remained relatively flat, but if you're looking for diversification, that's kind of what you want. You don't want the stocks to move up and down in correlation with your real estate. Fundrise is also focused on people who don't want to go through the hassle of investing in real estate as an individual. Now, you could just go out and buy rental houses, and that would give you the same diversification away from pure stocks or cryptocurrencies, but that requires a lot more effort. Finally, the last kind of person who I think would benefit from Fundrise is someone who's using a tax-advantaged account, like a 401k or an IRA. Because Fundrise pays out dividends rather than focusing on capital growth, you're going to be penalized tax-wise for taking those dividends. In order to avoid this, if you use a tax-advantaged account like a 401k or an IRA, you can avoid those higher taxes completely. So now that we have a clearer picture on the advantages and disadvantages to investing in Fundrise, let's take a look at the site itself. So the first page that you're going to be brought to is this How It Works tab on Fundrise's website. Here they basically just talk about all the different points that we already talked about, but they're going to put a positive spin on it, so we can skip most of this page. If we then go to the Investments tab, there are 4 different types of account levels that you can invest in here. Now, these aren't really plans, they're more like membership tier levels based on how much money you put into their accounts. So for example, you could start out with this basic plan, which requires a $1,000 minimum investment. In this plan, you gain a couple benefits, including automatic dividend reinvestment and auto investing. And for every person you refer to this website, you get 3 free months of advisory fees. If you then move on to the next level, which is the core level, this requires a $5,000 minimum investment. And in this, you get the same features as the basic plan, but you also get access to some additional REIT funds, and you get the ability to customize your investment strategy. If we then keep on going to the advanced plan, which is a $10,000 minimum investment, You also get the ability to directly allocate to most of their funds, and if you refer someone to their site, you get 6 free months of advisory fees. Finally, the highest level plan is the premium plan, which requires a $100,000 minimum investment. For this plan, the benefits you get are priority access to their investment team, and if you refer someone to the site, you get 12 free months of advisory fees. So then the one last tab that we should review before I actually log in here is the resources tab. Now there's 2 subsections here. The first is just the help and FAQ section, and this just kind of talks about how to get started, any problems with your account, etc. The more interesting section here is the education tab under resources. In here are different articles hosted on Fundrise's website that can either talk about some background on investing, so you have Investing 101, Advanced Investing, talking about using real estate to hedge against inflation in this story, for example. So I looked through a couple different articles on this website, and even though I've kind of ragged on Fundrise for some of the marketing language they use in other sections of the site, I was actually pretty impressed with this education section. I only looked at a couple articles here, but for example, in this year-end letter to investors, I thought the letter was actually pretty transparent and talked about a lot of the pros and cons of being invested with them without a huge slant one way or the other. Now granted, when you're reading these different stories, you have to keep in mind that they're being written by a company that's trying to sell you real estate, but in general, I thought this section was pretty good. So now let's log into the actual user part of the website. So once you actually log into the account, you're taken to this dashboard summary of all your different investments. Now I didn't feel like investing $1,000 into the site just for this video, so not all this data is filled in, but we can at least see what the different parts of this site are. So first off, you can see that I'm currently invested in the basic portfolio investment plan, which is what I would be in if I put $1,000 in. Now this basic investment plan only gives me one active project that I can look at, and there aren't any choices in certain kinds of investments I want to make here. But this will change if I say, let's go to the core plan instead. Once I open up the core plan, there's 3 different sub-plans that I could pick. I could pick one for supplemental income, which really focuses on dividends to make a consistent income over time. I could do balanced investing, which is going to give you a mix between income and growth, or I could just set a long-term growth plan. So let's select this one. And now if I go back to my investing account, you can see that now my investment plan is focused on long-term growth rather than just the basic plan. So now looking at this page, there's 3 different sections I want to look at. The first here is this account value page. This is just going to act just like a normal brokerage account might, where it tracks how much money you have invested with Fundrise and how much money that's made. Over here in the earnings tab, it breaks this out into 3 different categories: how much you've made from dividends, how much you've made from appreciation, and how much money you've spent in advisory fees, and then it adds it all up for you. And then the last section that we're going to look at here is this active projects section. Now that I switched to the long-term growth plan, you can see that there's 13 different active projects that I could look at here. So let's just click on one of them and look into it. So once I open up one of these active projects, I can actually see the project that is being worked on. I can see what the investment size is, as well as what the strategy is. And if I want to, I can click view details to see additional details about this investment. So in here, we can see what part of the country this is focused on. So this is focused on the Sun Belt. We can also see what the capital stack is. So this is mixed between the interval fund and the growth REIT. And we can also see the actual project timeline for this project. I really like how this information is laid out. It's really easy to see where everything is and kind of follow what's going on. Plus they give you all these pictures to really make it more concrete that you're investing in real estate and not just some numbers on a page. Now going back to the main page, if I was actively invested in something, this section here would also be filled in with dividends that I've received from those projects. Now also any appreciation that you gain is going to be updated on either a quarterly or semi-annual basis, but you're not going to be able to pull out that money in less than 5 years without facing fees for doing so. The other thing to consider is even after you've hit that 5-year timeline, you have to put in a request to redeem your money, and then that redemption is subject to their redemption plan. Now the specifics of this redemption plan are going to depend on the offer circular for your specific plan. So I looked into one of those just as an example. Now as you can see here, there are a ton of documents that you could look through on this website. So I kind of bounced around a little bit trying to figure out exactly where they talk about these redemption plan specifics. I looked into this document here and went through a couple pages before this then in turn led me to a different document where I finally found this Fundrise Balanced REIT 2 offer circular and benefits for their balanced REIT. And I got to page 32 out of 231 before I actually found their actual redemption plan. And in here, they include all the specific details on what it takes to redeem money from your account. Basically, you're going to be charged a fee if you redeem it before 5 years, and if you redeem it after that 5-year period, that redemption is still subject to approval from Fundrise. Now, you're not going to face any kinds of fees on that redemption, but they just want to make sure you're not going to pull your money out at a bad time, let's say when they need capital to start a new project, so that you won't hurt the returns of other investors. So overall, Fundrise definitely does have some drawbacks to balance out the hype that they have on their front page. But that being said, I do do think there's value in the platform, especially in the transparency of being able to see what your money is doing and having regular updates on those projects. Now, this information might be available for a traditional REIT, but Fundrise makes it so much easier to access in their website than it would be digging through documents for a traditional REIT. So I think that in itself could be a differentiator for certain investors. Now, whether or not this is enough to convince you to actually use the platform is entirely up to you. With that said, if you enjoyed this breakdown and review, make sure to leave a like and hit the subscribe button, and I'll see you next time.